So let's do a review of today's PM session. I will go a little bit over morning session as well, but the primarily focus is of the PM session of NASDAQ. So if we take the range of the last 3 days, starting from Thursday, Friday, and Monday, we get these quadrants. And also if we get the range of the previous day in black. I've also annotated the highs and the lows of the last 3 days. So Thursday low, we annotated here. Friday high. Monday is already annotated by the quadrants. And here we can see Friday low as well. So if we observe this morning session from 9:30, so when 9:30 started, it was happening around the AM range from last Friday between 9:30 to 10 AM. The highest high, the lowest low, and the quadrants. And we see that we have like relative equal highs. If we go 5 minutes, it'll be easier to see. So we made relative equal highs to Monday. Because the calendar shows that we have FOMC on Wednesday, and then we have other Redfold news, I likely expect a run into these relative equal highs later during this week. So we left that in place, as we see in the AM session today. And then we broke lower. We formed the bearish breaker. And notice how that happened around the first fair value gap of today. So the first fair value gap after 9:30. And here we have a run on liquidity like a turtle soup during the lunch macro. And then we break lower. Notice how more consolidation around the 1250 in the midnight range of today. And the focus is of today's session, the PM session. So between 1:30 to 2 PM. Get the quadrants. Lowest low, and this is the highest high. 75, 50, and 25 quadrants. This represents these lines. And if we look a bit on the higher time frame, we notice that there is a 4-hour order block from Tuesday 6 in the morning. And we see that overlap on the 1 hour as well. If we take the tail of that order block during the 2 PM, notice how we go to the almost to the half of it, which shows some bearishness. So if we are bearish on the price, it should respect that and not come up to the CB. On the 15 minutes, we notice also a bearish breaker. So high, low, higher high. This is the breaker, the last candle, 15 minutes. And this is the week. Notice also how the week is respected after 2 PM. And then on the 1 minute, we see the same thing. My focus for today's session was this order block from Monday, 12 PM, which happens around 17,387. Notice how that is also equilibrium of the previous day, 410. And notice how this order block on the 1 hour transposes with the low of the previous week. So look on the top, we see L 17387, 17387. So it's matching that. So this becomes an area of interest if we want to come lower. And let's see how it performed. Of course, it went much lower than that, as we can see. But this would have been the low-hanging fruit objective. So if we go back to the 1 minute, we notice how between the macro 150 to 210, here we also get the first fair value gap that happens after 130. So 130 opening prices here in blue. And then the first fair value gap that we find, there's no fair value gap until 1340. And this becomes the first fair value gap. Notice how price is consolidating in this area. It respects the midnight range here. And then comes lower. And it forms this bearish breaker. So high, low, higher high. This is the breaker. Notice also how this breaker, the bodies, are below the new day opening gap of today. While we are in this breaker, notice also how the bodies are staying below the midpoint of the fair value gap, of the first fair value gap. This is a sign that is likely to go lower. When we wait for more confirmation, we come down, we see multiple bearish breakers. So there's a bearish breaker here, there's a bearish breaker here, there's one here, and we also have this busy. So here I would have liked to see the bearish breaker be respected more, but as we know, the wicks do the damage. So notice how the bodies are staying below the half point of this fair value gap and inside the bearish breakers. Only the wicks go above. And that is happening during the 250 to 310 macro. So here we get the confirmation. The prices are going lower. Notice also the bearish breaker here and how price is respecting it. And we have our first target, the relative equal lows from Monday. So if we look market on close yesterday, we have sell side liquidity here. This is also the last 3-day range midpoint. So 17,410. Here was sorry, the previous day midpoint range. We see it here on Monday, and we also have Friday low. So we're likely to go lower. And then we see how during the macro time it delivers that. So 1450, 310. The move starts. So we could enter here at the BC, or we can enter at the bearish breaker. The BC is the inversion for the value gap. And then we come and take the lows, Friday low, and we still go lower than that. Then we have the 1515 to 1545 market on close. Here I also notice another trade. We have the 22 model. So price is going lower. It's hitting 17,139, which is the lower quadrant of the last 3 days. Notice how perfectly it's respecting that, And it's also taking the sell side liquidity. So it's coming lower than this candle here. Then we have a shift in market structure, forming this BC, and that is the 22 model. Here, first I was expecting it to come and take the relative equal highs. But what I've noticed is that 1529, this was the new week opening gap, 604. So if we look, we go back, notice this new week opening gap. So it respects the midpoint of that. And that's why it doesn't go higher to take the buy side liquidity yet. The trade long is further invalidated when it comes down to this BC. Here I could have anticipated that it goes upper, but what I missed to notice was that this BC is the 0.25 quadrant level. So this was another short here, actually. And it went lower to take Monday open price. So see this price here, 17,100. See how that is the Monday open price. Here. So it came back to that level. Notice how perfectly it respects it here. The 0.25 quadrant. And then it comes here, and here see the perfection. 1538, it comes up, perfectly touches it, then goes lower. And here we come a bit lower towards Monday AM range, 0.5 in a discount. And then we have the market on close macro, exactly at 350. It doesn't give any option to go in. And our targets are this buy side liquidity and this BC. Then we have a second BC here, and here 332, 331. So it failed to take this one, but it still gave us this fair value gap, this fair value gap, and this fair value gap, this buy side liquidity, and here it forms relative equal highs, which I expect to be taken later on. So this was the PM session. So there were two great trades here, one in the 250 macro. Again, same like yesterday, using the inversion fair value gap, and then going for the lower objective of Friday low of the relative equal lows from Monday market on close. And it even went lower than that to take the lower quadrant of last 3 days and Monday open. The second trade was a fail, like a scalp. It was a fail long, but it still gave a scalp opportunity. So from the market structure shift here, after it takes the sell side, could have aimed for this fair value gap and this fair value gap. This fair value gap, we consider it together with the volume imbalance. And then it failed here because it reached a new week opening gap, and time was also 3:30. So 3:30 is usually the time when the market reverses the other direction. And then we have the market on close, which goes for the fair value gaps. So hope you find this interesting, and I wish you a good night and good trading.